Okay. All right, everyone. We're ready to get started. I'm so glad that all of you could join us tonight. And I'm really excited because we're going to be talking about margins, one of my favorite topics because margins equal money. And I'm also excited because David Shepard is going to be joining me on this webinar to talk about margins. And I've known David for a long time. He's been a consultant to my business. I've read his books. I've taken his workshops over the years, and they've really helped me understand the business of business. And so I'll be going into David's background more a little bit later on, but I just wanted to let you know that David has a huge business background, and both as an entrepreneur and a business owner himself, and also as a professor who's taught at several leading business schools. So he definitely knows what he's talking about. And when I first started learning about what he talks about, like his 8 steps was the first book that I read of his. It just changed completely how I thought about my business. And so anyway, I'm hoping that tonight will help you think differently about your business too. And especially as we go into our heavy season, hopefully we'll all make some good money and we'll be able to think about margins while we're doing it. And so with that, I'm going to introduce David Shepard, who will be taking over the first part of the webinar to talk to us about margins.
Thank you, Cynthia. I appreciate it very much. I'm glad to be on this call, and I want to thank everyone who's joined us. I know it's tough if you've had a long day at the office or in the home office, and make a commitment to learning in the evening. I admire that greatly. I've had the opportunity over the years to work with big companies and small companies and thousands of entrepreneurs and solopreneurs. And my favorite place to be really is in the classroom and right here. And that is, I like to work with undergraduates, and I like to work with mom and pops who understand that they may never build $1 billion business and probably don't want to. But they do want to improve their life, the quality of their life. They do want to have the opportunity to travel or to put their kids in private schools or whatever that distinction is between just the level of subsistence and survival and really taking that next step to where things are a bit more comfortable. And having worked with thousands of small business owners over the years, I'm pretty sure I've got an idea of what it takes to get to that comfort level. And I've been so impressed with Cynthia, who I met a decade ago and then lost touch with, and the business that she's built. My gosh, we had to expand the bandwidth to get everyone on this webinar tonight. So it says something about what she's doing and the value she's adding to people's lives. So I had done an audio newsletter track about margins and the imperative nature of improving margins. And so this was where Cynthia started thinking about this, and this might be an ideal message for her audience. I'm coming up the learning curve on your business, and it's a fascinating one, and it fits right into the concept of how critical an understanding is of what margins are and how you protect and defend yours. Because there are sources out there that are eating away at your margins every way and every day. The moment the utility bill goes up, insurance goes up, delivery charges go up, price competitive nature drives prices down. Every one of these things is nibbling away at your profit margins. And in some industries, in some businesses, a 1% difference in a profit margin over a period of years compounded can make an enormous difference in your excess cash. And we're going to talk about 2 concepts tonight, excess cash and outside cash. And Cynthia and I will both define those in different ways in just a moment. But so I want to start tonight with the 10,000-foot view. And that view really begins back in the Harvard Business School with the guru of strategy of the 20th and early 21st century, Michael Porter. And Michael Porter told us many, many years ago that there were only 3 types of strategy available to any firm, large or small. You could be the overall cost leader, you could survive on a strategy of differentiation, or you could find a niche and focus on it. Now, something that many small business owners and solo practitioners don't understand is they will never be the overall cost leader. This strategy is not available to you. And the reason it's sometimes confusing is because the small business owner will think, oh, well, my overhead is nothing. I work on my kitchen table. I keep costs low. I don't have a big staff. You're really, in that case, confusing price with cost. And the overall cost leaders are the Walmarts, the Southwest Airlines, the companies that really scale up and really take advantage of those economies of scale. There is an opportunity to differentiate in many small businesses. Now, big company examples of this, just so we'll know what everybody's talking about, would be like BMW, a brand of differentiation, the ultimate driving machine. Nike, with its celebrity athlete endorsement, would be a brand of differentiation. But in your case, especially in the FBA world, it's going to be next to impossible for you to differentiate individual products, but it will be possible for you to differentiate bundles of products in a way that increases your profit margins. And I'll show you that in just a moment. So what you're really going to have to do is you're going to have a niche focus, but a niche focus not exclusively on customers, but on products and product bundles. Product bundles. Keep that in mind, okay? So let's look at the type of customers that are most ideal. So here's a classic matrix, a classic consulting tool. And on the left side, we have volume. And on the right side, we have margin that we've been talking about. So low margin, high margin, low volume, high volume. Now, very quickly, if I were to give you a pop quiz, I think you could determine which of these quadrants you would want most of your customers to reside in. And in fact, I'm guessing you got it right, that it is the right side of this graph. And the right side has one thing in common: high margin. Sorry, I went a little fast past that slide. I go back to it. Had a high margin. So regardless of whether your volume, the quantity of units and the number of widgets that you sell is high or low, the thing that is consistent for successful small businesses is that anything they sell must have high margins. You're not going to be the low cost leader, the overall cost leader, and you're not going to be able to survive on the old joke in business school that you lose a little bit on every sale and make it up on volume. Have to have the high margins. Now, let's take another look, because margin is a function of two things, isn't it? It's not just a function of price and price sensitivity. It's a function of price minus cost. So you have to give some serious thought to what your costs are. And again, entrepreneurs can sometimes miscalculate here because they think I've got low cost. I don't pay myself a big salary. I don't rent a big office. I don't hire a bunch of people. But that's not true. Your time is an enormous cost, and transaction costs are critical. How long it takes you to get in your car and drive and purchase a product and get back and put it in the UPS and send it off, those are costs. And if one bundle of products costs you more to do that than another, then it may well have a lower margin, even if it looks like it has a higher price. So when we look at a quadrant on which we put prices and cost to serve, or in your case, we could almost say cost to deliver, not the neatest writer in the world, but I enjoy it, cost to deliver, then you've got these quadrants. You've got someone that would pay high prices almost without thinking about it. They're very passive. They just see a thing they want. I don't care what the price is, they pay. Someone else will pay the high price, but they demand great service. Then you have the people who will pay low prices, but they don't care much for service. These may be the people who shop at Sam's or something. They don't care if the floor is concrete. They just want a good price. And then you've got the people who are aggressive. They demand high service, but they want to pay low prices. Okay, so now which two quadrants do you want your customers to be in? And I think the obvious answer here is, and what's consistent? Well, what's consistent is high prices. So high prices, high margin. Now, again, I'm just coming up the learning curve on your business. So when I'm from the 10,000 foot view. In a moment, Cynthia is going to take you down to the 1 foot view of how it really works in the real world. But I do know enough to say, yes, go ahead.
I was just going to say, for those of looking at this chart, the carriage trade is where a lot of Amazon Prime buyers are. Like, they love Amazon and they pay to be Prime members and they spend more on Amazon, but they also love Amazon because of the great service that they get. So, obviously they wouldn't be there paying those prices if they didn't feel they would also get great service, which they do because Amazon is servicing them. And so when you look at the Prime member, who is our primary customer that we are, selling to, they're going to be right across the top there. High prices passive, high prices carriage. But the good news is Amazon takes on a lot of the heavy lifting for the carriage guys who want a lot of service and a lot of high touch. They do that for us, and 99% of the time we don't even have to deal with the customer. So, what I see as a problem in our business is that too many people think we're selling to the bargain basement. And I just want to clarify that when we shop for inventory, we are the bargain basement shopper, right? But when we sell, we're selling to the carriage trade.
It's exactly right, and such a good point, because if you had to provide yourself the caliber of service that your customers require, then the business would almost not even be feasible. It just wouldn't be feasible for a small business to put in place the type of procurement and fulfillment that Amazon provides for you. So it's a very cool business model, really, and a very good pickup there, Cynthia. So what you want to do over time, and I know some of you have been at this a while and some are relatively new, but this was a graph that I used back in the 8 Steps book to plot your customers. So for you, again, what I'm thinking about is you should look at these as products or product lines, types of products, whether it's toys or groceries or books or whatever it happens to be, and go back and think about what you've done so far to date. And we're not talking about big data here. You don't need to create a big spreadsheet and track every penny on this. Cynthia will talk more about that in a moment. But just think about product categories that have fit into the good 2 quadrants here. And if for you that's books, or for you that's tools, then these are the type of categories that you'll want to pay more and more attention to and get better and better at over time. And if that one thing that perhaps had a high price that you thought was going to be a real winner, but it was a pain to purchase and it was a pain to ship and it took forever to sell and then it was returned, and I mean, whatever it happens to be, what's in your aggressive quadrant that just didn't work for you? Well, you want to make sure not to repeat that. So when we talk about price and we talk about cost to serve, we're talking about the 2 components of margins. Now, where margins also come into play is what's referred to as contribution margin. And what that means is that the individual product margin from every category that you have, and remember, I'm calling these categories, so not a single product, but a category of products. You're going to have an average profit margin on each of these categories, some shown here to scale larger than others. But whatever the net profit margin of each category is, that sums to the total contribution margin. These are the dollars that you have to cover your overhead. And once that's done, anything that's left over is profit. So getting 2% more out of this category over time is going to fall straight to your bottom line because your overhead has already been covered. So there are fun examples that I love giving, and I don't have them all queued up tonight. But I think Cynthia even maybe had a question in her blog post about this topic was that, does a 10% price increase equal a 10% increase in profit? And the answer in this case was no. It's very feasible that a 10% increase in price, that would be way up here, would cause a 100% increase in profit. And so understand that not all dollars are the same, and these margin dollars flow straight to the bottom line. So keep an eye on this chart. I'm going to come back to it in a second. But let's say that on the back of an envelope, common sense, not a detailed spreadsheet, you start to figure out what your 5 or 6 product categories are, which ones are most profitable, have the best profit margins. Then look at the smaller ones. Think of how much time it's taking you to satisfy those categories and ask yourself if this might not be a more profitable model. That might be a more profitable model than that. You see? And this gets us to something, and I know if you get these 2 big ones and you find 2 more big ones, I know that's a more profitable business model. And it kind of brings up here what everyone knows as the 80-20 rule or Pareto's law. But I want to just share with you a little bit about Pareto, because people hear this and they think maybe this is some sort of management, some sort of management maxim or self-help, pablum. No, Pareto was a very serious sociologist, Italian sociologist. And he didn't just make up this rule. He studied wealth distribution in countries all over the world. And what he discovered was that in every country, regardless of its political system, regardless of its economic system, regardless of its religious systems, that about 20% of the people controlled 80% of the wealth. Now, he didn't find out that it was 21% or 19%. For some statistical reason, it was always exactly 20%. So this rule then became the foundation of quality control in America, all the Deming quality control, the Japanese quality control, all the way through today's Six Sigma and all of that stuff. This is where that all began, was the 80-20 rule. But a better name for Pareto's law is the law of the critical few. I'll write that down. That's the 20%. And the trivial many. Can't read that. Many. So that's Pareto's law, the critical few and the trivial many. And so what we're talking about when we talk about your cost is you may be, in fact, you almost certainly are, if you haven't really stopped to counter it and confront it, is you probably are spending 80% of your time chasing around on the products and the services and the marketing that are only delivering 20% of your profits. So that's why it's so important to figure out what your profit pools are. A slightly different concept, but one that I show here, is you have to understand what your, I keep forgetting, I have to check this little pen thing, what your sales are, but you have to understand what sales of a particular category are relative to the time and overhead that are associated with that particular category. So yes, here's a good one. Here's an okay one. Here's a not so good one. Because when we stop to figure out the time it takes and the space it takes, excuse me a sec, I keep doing this. I've got a cool little drawing board that wants to come on automatically whenever I draw. So this is the way you have to look at your profit pools so that you can understand where you're making money and where you're not. And if we were in the classroom and we had a couple of hours, I could tell you some case stories that are amazing about companies that thought they were making money in a particular area and then discovered later that they weren't. And all they had to do in some of these companies was to stop doing something, and their profits went up just literally by doing less. And then I'm going to let Cynthia take over in a moment. I want to just bring one other concept, and then we're also going to have time at the end for questions, is don't confuse margin and markup. And I've seen this happen in lots of industries, including ones where it's pretty critical, like yours. So you don't always get to. I'll let stand to be corrected if I'm what I'm about to say, but because you have a firm cost, and then because you're checking the marketplace to see what you might be able to price at, your margin is somewhat predetermined for you. But you have to have the guidelines of whether it's sufficient to justify your time and to create a good profit pool for you. So just remember, for example, that if a unit of something cost you $20, and then you find that you can price it at 45, people get markups and margin confused because one of them is a function of cost here, and the other one is a function of price. And so the easiest way to keep this in mind is, first of all, to write it just like this, is say, first of all, I need to know my gross profit margin in dollars. And that in this example is $25. Okay. Then I can look at it and say that these are the margin dollars. I'm going to call it just MD. So if I want to know my markup in this particular example, then I'm going to have the margin dollars, this number, 25. I'm going to draw a little slower here, divided by my cost, which is 20, which equals 125%. That's my markup. I took this dollars that I'm going to make on that product and I divided it by what it cost me, because markup is a function of cost. But margin is a function of price. So I would take the same margin dollar, 25, and divide it by my price, 45. My writing seems to be getting worse. And so we have a margin of 56%. Sometimes easy way to remind yourself of this is to think of a product that is marked up 100%. If you have 100% marked up, you'll have a 50% profit margin. And so it can be kind of dangerous if you're thinking, well, I've listened to Cynthia or I've read this or that, and I know I need to average 40% margins. So I'll mark everything up 40%. I'll only sell things that I can mark up 40%. No, that's incorrect. In fact, I had a table right here somewhere headed on, but if you want a 40% margin, you're going to have to mark everything up approximately 60%. I can get a table for you. But just make sure you understand the difference so that you're not aiming for a margin that you're never going to get because you're selling items that you can't get the right kind of markup on. Okay, so that's kind of an overview of the 10,000 foot view, and what we're working on are two concepts, excess cash and outside cash. Because in my 25, 30 years of working with small business owners and owning my own businesses, I've really discovered that you need both in order to reach that level of comfort. The excess cash comes from within your existing business model, and that's what we're working on tonight. And then the outside cash are just looking for other sources of income, whether it's passive or fairly passive, and those can be things like associate programs and affiliate programs, and Cynthia's going to say a few words about those at the very end of our program tonight. But now I'm going to turn it over to her. Take me a moment to give you the right privileges, Cynthia, and then you're going to talk to them about improving cash from their existing business or excess cash.
Yes. And while you're doing that, if you guys remember that slide he showed us with the sales and then the work that you put into it, I have discovered in my Amazon business that there are definitely categories of products that are a lot more trouble than others. Like, grocery, which I love because there's usually really good margins on grocery, requires a lot of work because almost everything has to be polybagged. Whereas books, you don't have to do anything with them unless they're really rare or delicate or something. But for most of them, you can just, drop them in a box. And so the effort on a book is very low, but then you have to handle and touch and price every single book, and you can fit 50 books in a box, right? So, whereas if you're buying food, you may have, 1,000 bottles of ketchup to sell. And so that's pretty simple from a labeling perspective. You just have to do all that damn bagging. So, each of us has to decide in our own business, what we're willing to put in, as David says, and, what our resources are and what we feel is that best mix of time spent and dollars returned. So I just wanted to add that to his slide. And, to get back to excess cash, I also wanted to add to what David was saying, when he was saying, oh, that's a 50% margin. We like to do higher than that, and I'm going to talk about that and why. And so in that example where he was selling something, he was buying it for 20 and selling it for 45, I would say we would buy it for 20 and sell it for 60. So just keep that in mind. That is one way to keep the margins up. And so I'm going to show you now why that is. So let's see if I can just move along.
There you go. Worked on my end.
Oh, got it. Okay. Okay, so what is a good margin, for an FBA seller? And by the way, this is not the law, but this is just a guideline for you to think about. Everyone's business is going to be a little bit different. But what I like to do in my business is I like to double my money after my expenses. And that's not just Amazon's expenses, which we're all very familiar with, but even the expenses inside my business. So I like to basically take $1, turn it into $2, if you want to think of it that way. And the price that product has to be may vary, right? It's not going to be a simple, oh, we'll just double the price or triple the price, because as we know, Amazon's expenses vary depending on how big something is, how heavy it is, and all of that stuff. And so the good news is we don't have to figure out that math in our head, because our scouting programs, most of the ones that I know of, including the one I use, do that for us. So they tell us, okay, after all the fees, if you price it at this is what you'll clear. So when I'm looking at my scanner, that's what I'm looking for. I'm saying, well, can I sell this reasonably at this price such that if I spend $20, I'll clear 40 after the expenses. And so here you see I say a goal of 30% net profit. And what I'm talking about there is of the entire business. So my year's revenue, income outflows, I would like to have about 30% that I can do with whatever I like. So it doesn't have to go back into the business. This is money I get to use to pay for my son's school and other things, vacations and what have you. And I also, this is not anything to do with margin, but obviously cash flow is an issue. So if you remember that chart where he was talking about, it may be a slow seller but high margin, and definitely we are interested in those. We call those long tails, but they can't make up our entire business, or we will go out of business, because you need to have cash flow. And so turnaround is obviously important. Our inventory has to be working for us. And so if you look at the right-hand side of this slide, these are rough, rounded up numbers, but just to kind of show you what I'm talking about, my overall sales last year were around 100,000. The cost of goods sold, that's the COGS, that is about what I used to buy inventory with. So I was just paying for the stuff. And I do a lot of thrift store shopping and book sales, so I'm getting a lot of inventory really cheap. For other people, their cost of goods sold may be a lot higher. Maybe they just buy toys. Maybe they're, just buying new items. And so, don't take this as a target, like something you have to hit. It's just a number to be aware of when you're doing your own math, like what is my cost of goods sold? And then the gross profit margin, that's the GPM. So again, that would just be 75,000. And then my expenses, we're about 44,000. So that includes Amazon. That also includes my costs here at the office to run my business, keep the lights on, to pay for the subscriptions to Scam Power and Amazon and all of that stuff. You add all that up, and I have an assistant in the Philippines. So anyway, this is all in that 44,000. And so what it left me with, NOI as the net operating income, is about 31,000 to pay myself with, right? Basically, and that is that's where you want to be. When I talked about kind of sloppy margins in the blog post, we're talking about the concept of if you have a big enough margin, you don't have to religiously track every expense and create enormous spreadsheets and do all that stuff. Basically, if your margin's big enough, you can as a small business, you can live without, tracking every single thing. But anyway, I just wanted to show people that, and then okay, a lot of you have seen this slide before, and it may be a little hard to see if you're looking like on a laptop screen or something, but I just want all of you to know we're going to make this available to you guys afterwards, this presentation, so you'll be able to see it much better. But anyway, this is a spreadsheet that many of you have seen when I talked about the change in Amazon's fees. And the top half, takes products that I've sold and takes out Amazon's fees, so you can see what money was actually put in my account, basically, from these items. And then on the bottom half of the chart shows expenses that I kind of attributed to it. Like I said, okay, let's take out a percentage of what I pay on, Scan Power and Amazon and include that. Oh, we got to include a little bit for, tape and boxes and all the stuff that it costs to send things to Amazon and things like that. So that's what the bottom half has. And this is a very simplified chart, but what it did for me, because if I really was going to get into it, I would have listed everything, like here's what my electric bill costs and, a percentage of that. And, but what I was doing here was trying to give myself a feeling for how much money I actually make on an $8 book, right? And so what I came up with is I make about $3.35. So if I know that going into it when I'm, shopping at a book sale, I'm not going to spend $2 for a book I think I can sell for $8. If you see what I mean. Because for me, then I'll only be making, I won't really be making that much. So even though I did include in this chart what I actually spent on the book, the more I spend on the book, obviously the less, net profit I'm going to have. But this also is what I've decided is worth my trouble, right? To me, it's worth my trouble to spend 25 cents or $1 on a book and, sell it for $8. But you may look at your chart that you do for yourself and you say, that is not worth my effort. I'm not going to spend that much time on something where I'm only going to make $3, no matter how cheap it was. And so you may decide, you know what, I'm going to do, appliances, or I want to look more at toys, or I want to look at other things because books, I don't like that. That's not appealing to me, and even though the margin's there, I want to make more per item that I sell. So this is where everyone's business is really so different and so personal to what you prefer and how you like to do business. Okay, so I'm going to go next. Okay, and I wanted to talk about, because we do talk about, well, how do you keep track of things? And I do recommend, obviously that you have some kind of bookkeeping program, whether it's QuickBooks or Outright, or I know they've changed their name, or, whatever it is, but something that's easy for you to use to keep track of your expenses. But everything from the moment your goods get, actually from the moment the goods leave your house, Amazon has got you covered. So I wanted to show you just a couple of the reports that are really useful. And so you can see, one of the reports I'm looking at here are the statements. Also, date range reports are really helpful. And what these do, when you look at them in detail, though, if you download it, you'll get a big, spreadsheet with every possible imaginable detail you can possibly imagine for that time period. And, you can really look at what the fees are, what you're actually making on that product. I mean, every detail about that product and how long it took to sell, and everything. Amazon will tell you who bought it. I mean, it's really something. And then oh gosh, I can barely read it on the screen, but the net revenue tool, the SKU net revenue tool, what they do there is they help you project. They have a little tool to help you project basically how much money you might make on a particular SKU, or how much one is making for you. Like if you have 1,000 ketchup bottles or something, how fast are they selling? How much are you making on that SKU? How long does it take you to sell 1,000 of them? So that can help you kind of figure that out. Like, oh, I'm selling 5 a week. It's going to take a long time to sell 1,000, but and you wouldn't want to send all 1,000 in at the same time anyway. But that's anyway. Those are those reports, and then the payment reports. And by the way, that kind of information that's in the payment report is stuff that your bookkeeper or CPA wants, because they have to register all your expenses, and they just pull them right off that report. I'm trying to get it to go here. There we go. Okay, so fulfillment reports are also really helpful. There's a couple that I use quite a bit. The Amazon Fulfilled Inventory Report is a snapshot in time. So I always tell people, print this off on December 31st. Your CPA wants it. And because it tells you how much inventory you have at the moment that report is generated. So it's not going to give you historical data. It's going to tell you today, this is how much inventory you have up at the warehouse, and here's what it is. And so, I always have to provide my CPA with how much inventory I have up there, at the end of the year. And so this tells me what it is. Now, I still have to match what I paid for that inventory to it, but it's nice to have a nice spreadsheet with all the SKUs and everything right there. And so at any time, if you want to know, well, what exactly is up there right now, this report will do it for you. Payments, now if you're looking at this picture, you can see that under these reports, there is a whole long list on the left-hand side of reports. In fact, that list is so long I couldn't get all of them in the picture. So just take my word for it that down on the screen more is payments. And the payment reports that are most useful to us is the fee preview, the long-term storage fee charges, and reimbursements, because of course all of them affect how much money we make, right? So if you ever wonder exactly what the fee, if you're not sure what the fee is going to be on something you have up there, you can actually check it out before you send it up there. The other thing you can do is find out what your long-term storage fee charges are going to be. So you can find out way in advance, anytime you want. So that gives you an opportunity to see what your problem SKUs are, i.e. what's not moving, what hasn't moved, what do I need to get rid of or reprice. And you want to do that well before Amazon assesses those fees, which they do twice a year. And then reimbursements, they will pay for their mistakes. So if they've damaged something in the warehouse, it's damaged in shipping, a customer broke something, they will pay us for it. And so it's always good to see and to check that they're reimbursing us for things that you think they should be. And also, that's going to change, because it's going to change what you might be expecting, because they rarely are going to pay us what we think that item was worth, although it's usually more than what we actually paid for it. So I always feel fine with that. I'm not losing money. I'm just not making the great dollars I hope to make. Okay, so another way to really look at increasing your excess cash, of course, is to reduce your expenses. And one of the biggest expenses we have is taxes. And even if it's not your number one expense, it is certainly the most dear, because here it is, you're paying money to Uncle Sam, and those dollars are not doing anything to help your business. They're not doing anything to make you more money. except in perhaps the most abstract way. And, they're not doing anything for you. They're just costing you. And so one of the strategies that I recommend that people look at is to incorporate, which when a lot of people are starting their Amazon business, it's too much work. Like they got so much they're thinking about. They're like, I can't think about that. This is fine. Think about it later, because it's really going to be worth it when you have the time to think about it, because there are benefits that corporations get that people don't. I laughed when Mitt Romney called corporations people, because the fact is they're not people. They're better than people. Corporations get things that people will never get in terms of deductions and things like that. And so it's worth looking into and talking to a CPA who understands the tax strategies of big companies and how you can apply them, because what I have found with a lot of CPAs is they really don't get it. I went to a 2-day seminar in Reno years ago on taxes, and what better place than Reno, right? And I came back, and I said to my CPA, can I really do this? I went over several tax strategies that I'd learned. Can I do this? Can I do this? Can I do that? And she's like, oh, yeah, you can do that. And then I fired her, because the fact is I had begged her to help me think about things that I could do to reduce my taxes in my business legally, and she had nothing, right? Nothing beyond the obvious, like, oh, you can write off your computer. I mean, it was nothing. And so I fired her. And I have someone now who I work with who calls me the biggest small business she's ever worked with, because I run my company like IBM. But that's also how I've been able to save so much money on taxes, and I'm willing to do it. Some people will never be willing to do it, and so fine, don't do it. I get it. It is paperwork. It is a pain in the ass. But if you are interested, this book is a good one, and it's in pretty much plain English, and it'll help you think of the questions you need to ask your CPA so she or he can help you. Okay, next page. All right, I'm having trouble with my clicker here, guys. Sorry.
I'll see if I can change it. There you go.
There you go. Okay, and then there's obvious ways to reduce expenses, like, your supplies. And just a couple of things about supplies. I'm sure you guys know most of this stuff. If you have someone else that that's in the business, you might want to buy a quantity and share it. I do that with someone here in town, and that's very helpful because, together we can afford large quantities of bags and boxes and all kinds of things, and then we get a really good price. I always tell people to reuse. I am an Amazon Prime buyer. I buy from you guys, and they always send me all these great packing pillows with every box, and I save them all and I reuse them when I send my boxes into Amazon. I haven't had to buy bubble paper ever. One thing to reduce expenses is to get organized, and because if you're not organized, you're losing things and then you're buying them over and over again. And I know this from experience. So I'm a reluctant organizer. I'm always happy when it's done, and I only do it because I know it means dollars and cents. But my natural tendency is to be sloppy. I also wanted to say that, Walmart has some good prices. Lowe's and Home Depot have good prices on boxes and things. Uline, I find, has great prices, but if you have to have them ship it to you, it's really expensive then. The shipping is incredible. So if you're anywhere near one of their warehouses, like within a reasonable drive or maybe a special trip out of town, you may want to consider doing that because the prices are really good. But and I'm lucky because I'm near one, and so it's not a big deal for me just to go there and pick it up. But otherwise, places like Walmart and Home Depot, just don't go to an office supply store. You'll pay 3 to 4 times as much for the same stuff. The exact same stuff. I mean, they must buy from Uline too. That's what I've decided, because it is exactly the same, only they're charging a lot more for it. So that's just a note on supplies. And then, of course, you should buy on Amazon and eBay, too. I do. So let me just go to the next page.
Oops.
And then the services. So sometimes we get caught up in a lot of different kinds of services. What should I pay for? What shouldn't I? And so the only thing I would say on this is you have to have some kind of scouting solution, and there are some inexpensive ones. You do need a listing solution. Of course, you have to have a pro seller account, which is $40 a month, and high-speed internet, and then really almost everything else you should examine. Because if you think about it, you're paying $300 a month for these services, your cell phone, your internet connection, and you're paying at least $300 a month for all of that. Every month, no matter what. That's part of your overhead. So everything else should be seen as pretty much optional until you're generating the cash flow to afford it. And outside cash. Okay, so since we all sell on Amazon, I just thought I'd talk about a couple other ways to make money, both with Amazon and other programs, including David's, which I'm going to talk about in a second. But the Amazon affiliate program is a no-brainer for anybody who has a website, because basically you can just list all these different products that might be useful, and you make a percentage of what you sell. And it's a small percentage, it's like 5% for books, and it says here 8.5% for kids, baby, and toys, and so it's different percentages. And I have some books that I sell on my blog, and I mean, I don't sell them, I just have the picture there, right? And then people click through and they buy them from Amazon, and if they do, I make a small 5%. So I'm making maybe 20 or 30 bucks a month, which is not, a business by itself, but again, it goes right to my bottom line. It's costs nothing to set up or do. It took me about 10 minutes to get it set up. So that's something to think about, since we're already on Amazon every day, all the time anyway. If you have a website, definitely think about what you can put on it that if people click through, you'll make a small percentage on. You could even promote products that you're actively selling. I mean, why not? Okay, come on. Okay, so here's another program that Amazon does that is very, very profitable and easy. Again, basically what they do is they make it really easy to publish anything. The Kindle is obviously an ebook for their Kindle. Create Space will help you create, books, right? And they'll also transform your book into a Kindle book. And then ACX is if you want to create an audiobook. And so all of these work together. Your product will get posted on Amazon. You'll make a terrific royalty on it. And I say this because as a small independent publisher, I know what actual royalties are, and most people don't even make $1 a book on their books. So think about that. With their Kindle, if you price it at $9.99, you'll make $7 on it. I mean, you're making more on a little Kindle book than another author would make selling a $30 hardback. So anyway, I've got the URLs there, but that's something to think about if you're, creative that way, or if you have something you write about. And it doesn't have to be about Amazon. I mean, you can write about any area of expertise that you have. There's probably an audience out there that would like to know what you've learned in your many years, of your career BA before Amazon. Okay. I don't know. I'm having trouble, David.
Okay, I got you there.
Okay. All right. So I've assigned some homework. You don't have to send it to me, but this is just something for you to think about. And like I said, everybody will get a copy of this. And now that you've, thought about margins and you know of some reports that you can go to look at, what you're making, have a look at your fixed expenses, both on this, in your office and up at Amazon, and your variable expenses. And these are expenses that vary, obviously. Like, Amazon charges a commission, and that's going to vary depending on how much you price your product at, right? Whereas they have a set fee for pick and pack. So, just figure out what those are, and then create your own rules of thumb for scouting. So think about to yourself, like, what product category is most profitable for you, where you're going to spend your time, what kinds of things do you want to buy, how much do you need to see on your scanner for you to be interested. If you have all this figured out before you go shopping, it's much easier. It just makes things go really faster. And then, think about not just your out-of-pocket costs, but your time, your current resources, and where you would like to be, in a year, right? Because, like I said in my blog, somebody who's making, about $18,000 a year take home, and someone who's making $100,000, they can both have a really good model, right? It just may be that the person who's making $18,000 just doesn't have the resources yet to make 100, right? You still have to have money to buy inventory with, and so it may take them a while to get up to 100. But if their margins are right, they'll get there, because they'll be making enough money that they can take some and put more back in and more back in. So anyway, for those of you who want to think it through, there's your homework. And then I wanted to talk about, other ways to make excess cash. And David has a plan that he's going to talk to you about, a program. And I just wanted to say, I've been, I get his newsletter. It's a podcast. You listen to it like on your phone or on the go or whatever. And it's really helpful to me because it covers all kinds of business topics. It's got great stories. It makes me think about my business. And I really enjoy it. And so what he has that's a little bit different than some other people, though, is he has an affiliate program that goes with it, which I just offer to you guys if you're interested. If you want to look at this as a way to make just some passive income, have a look at it. If you don't want to, it doesn't matter. But one thing that he does do that I really suggest you look at is he has a free month. So you can go on there and listen to every podcast he has and get a lot of information, and then you can decide, like, okay, I like this, I want to keep doing it, or you can say, not for me, and that's it. He makes it really easy just to say, no, not interested. And so that's why I don't mind recommending it, because it really is that easy to just say no. And there's also just such good information out there. I think you'll find it inspiring. I do. When I listen to it, my mind starts to work, and I think, oh, I should apply that to my business, or, I wonder how that would work in my world. So for what it's worth, David's going to talk about it, but I just, it was very important to me that this seminar be about margins and it be useful to sellers like us. And so that's why this is at the end, because it is completely optional. So yeah, I just wanted to say that.
No doubt. And thank you. I appreciate your comments on that. I just want to tell the history of where it came from, and then we'll show you how to find more information on it if you want. Then we've got some good questions coming in, so please hang with us for another 5 or 10 minutes or so. But over the last 10 years, I've effectively run a conference business for small business owners, and about 3,000 small business owners have come to my conferences. And during the course of that, several hundred of those became private consulting clients. And so I had a national network of small business owners. And during the course of that, one of the perks I created for them was a monthly audio newsletter. Obviously, I'm reading and researching and teaching all day, every day. And there's just a lot of material that I found entertaining, educational, yes, inspirational, that wasn't making it into a printed format or a video presentation. And I discovered by working with my consulting clients that audio, you talk about a niche marketing, audio is really a niche. everybody's listening to something almost all times now, whether they're at the gym or on the plane or in their car. But not a lot of them have figured out yet that they could be listening to something that was entertaining, but was also helping them to achieve their business goals. So really, there are two aspects of this audio newsletter. One is forget the affiliate program, unless that's the type of thing you're interested in. Just try it and see if you find the content valuable. And so that's the goal. Every month I have tracks on cash flow, strategy, marketing, trends, opportunities, hour and a half or so, 60, 90 minutes of audio. We're starting to introduce some guest tracks. You can search by category once you are subscribers. So if you want to listen to nothing but cash flow or nothing but humor or nothing but inspiration, that part of it works just like a blog works. And so, as Cynthia mentioned, yes, we have an affiliate program. It's something you can find out about, and I'll show you how to do that in just a second. And I'm going to go to it's a multi-level affiliate program, which is the reason for that is it's the only way I could help you to earn enough to make a difference. So it's aggressive, it's ambitious, and you'll either like it or you won't, but that's entirely up to you. So while I go to this web page very quickly, I just want to show you that if you were to log into the site to show you how it works, immediately upon logging in, you would come to the most current audio player. And from this player, from an iPhone, iPad, PC, any operating system, any browser, anything, anywhere, you could just start listening to tracks. And so people say they do this on Saturday while they're cleaning out their office or filing or while they're on the treadmill. And so you just click on any track you want to click on. I just clicked on checklist. And that track will start to play.
Corinne Brown is a longtime subscriber to this newsletter and a very successful businesswoman in beautiful Mammoth Lakes, California.
And talking about checklists, this one has something kind of fun at the end, which was talking about, remember Sully Sullenberger?
The pilot?
Okay, you need to return to Albright. Turn left heading.
So that's where he tells him he's going in the Hudson. So I try to make it fun and try to make it entertaining. And like I say, you can search over here. What I've done is I've created a page that's based, that sort of has Cynthia's name on it and her message. And I'm going to send you in the chat area right now a link to that page, or you can just write it down if you want. And so let's see here. Not sure if you've got that on your chat. Anyway, you might just want to, you did get it?
Yeah, it's there.
Okay, so Cynthia got it as a panelist, but I'm not sure everyone got it. Let me try that again. I think I didn't send it to the full group. And there's that. And now I'm going to send it to entire audience. Excuse me, a little technical. Must be the wine hour. Okay, so you can just click on that to go to this page. And then you can watch a YouTube video, about 18 minutes, that covers the whole newsletter and the affiliate program. You can also go over here under the Affiliate Central panel and find out how it works, tutorials and help, special contests. You got a commission calculator there. You can see how the commission works. And then we have about a 12-page quick start guide to show you how to get involved if you are interested in the affiliate program. And like I said, I don't want to overhype, but the numbers are pretty exciting. And for some of you, it might be a nice source of outside cash in addition to improving your business model. If you want to start your free trial, and yes, you can cancel at any time, the confirmation email you get when you start a free trial tells you exactly how to cancel. So we do require a credit card because it's the only way we can get rid of spam. But you can call Cynthia if you ever have any problem with that. She'll call me. So don't worry about it. But you just click on this link, and this is a link that Cynthia is participating in the affiliate program. She's trying it out, doesn't know how it's going to work for her, but she's trying it out. So you want to click on this link on her page to make sure that if you decide to remain a subscriber, then you'll be a part of her network. So that's I think that's all there is to say about that, Cynthia, unless you have anything to add.
Yeah, it's really pretty straightforward, because if it's something that you would recommend anyways, then you might as well make something off it. And obviously if it's not, then you're not going to stay with it. So, and fair enough. But
Yeah.
hopefully it will be helpful to you as it has been to me. And so now,
You want to deal
David,
with a
I'm
few?
not able to see the questions that
Okay,
people are
great.
asking.
I get to read them out. So
Okay.
let me give you some in order, and first of all, I'm gonna get back to kind of our opening slide here to make things look pretty. Okay, so first question, Cynthia, was that you're talking about a 4x markup, or aim for 4 times your cost, and it seemed like a lot of people out there are talking about 3 times the cost. Do you have a comment on that?
Well, actually, I was talking about 3x. It depends on what the product is, how big it is. So sometimes it's 3x, sometimes it's 4x to get the right margin. So, if I'm buying a $5 toy, I need to sell it for at least $15 for me to get that to where I clear enough to double my money. If it's a book, it might take more or less than that because books are heavy.
Okay.
Or if I'm selling appliances, then I generally have to sell it for quite a bit more. So what I do is I'm really looking for basically to double my money. So if I spend $10 on something after Amazon's fees, after I pay, pay myself back and all that stuff, I want to have doubled my money. So if I spend 10, I want to clear 10 after I pay all my expenses and what I paid for it. So whatever that takes is what I'm looking for in my markup. So if I'm looking at my scan power on my smartphone and it doesn't seem like there's any way I could make that margin, if the prices aren't going to be right, then I just move on. But that's why for a lot of things, 3x might be correct. Like, oh, I can sell this for $15 and I'll make my margin. But in other cases, if it's oversized or heavy or something like that, it may not be true. You may have to do 4x or more. So that's why it's really important to know what you're trying to achieve.
Okay.
And that's why it's so important to get the net that we get from this is a tool that we use, David, and to get the net that Scan Power gives me really helps me understand, like, okay, this is what the net is after Amazon's fees, and then it's easy enough to figure out, to subtract what I'm paying for it and what my other fees are going to be.
So
what I
think I hear you saying, which is the view I would support, is you don't care what the markup is. It's what we said at the first of this presentation. You just care about the margin. So if a particular product has to be marked up 3 times for it to justify you selling it, then it's 3. If it has to be marked up 4, then it's 4. And if you can't get 4, you don't carry the product. I mean, it's pretty simple.
Right.
Okay.
Here's
a question that I'll answer the first time, and then you can say if you went through this process too. But incorporate or an LLC, and of course there are other forms of organization. There's partnerships. There, of course, you can organize as a sole proprietorship, which many of you sort of are automatically, and then C corps or S corps, and those are kind of standard questions. And the S corp and the C corp goes with the incorporate. And I don't know of any small businesses that incorporate that do not incorporate as S corps. So I assume, Cynthia, you are also an S corp?
No, I was an S corp. My first business was an S corp, and it was great because the profit and loss of your business flows into your personal taxes.
Right.
And so if you run your business in such a way that on paper you're taking a loss, which I always made sure that I did, then that loss would roll over to your personal taxes. There's a lot of benefits to an S corp. But I am currently a C corp, and that was because there were certain things I could not do as an S corp that I wanted to do, and that I could only do as a C corp. And I won't get into it because it's really technical. I mean, boring. But
both of those.
This is where you need to talk to someone about what you're trying to achieve, because then it really makes a difference. But really, they're very similar. An LLC is very similar to a C corp, and it's very similar to an S corp. The difference with an LLC is that it's newer and thus less tried. And what I mean by that is there's been fewer lawsuits yet, and so I looked at it as risky because whenever there's a new form of entity out there, there's always a bunch of lawsuits until everything gets worked out and settled and the IRS makes rulings and stuff.
I'll tell you my position on this, and I teach it a lot, is there are three reasons that you would even bother to have any form of organization. One is limited liability, which is what you're describing. But if you don't have anything that's worth protecting, I mean, if you don't have a big business, if you don't have a lot of net worth, nobody's going to sue you anyway. So that's not the most critical one. The second is to raise capital. Obviously, if you're a sole proprietor, you really can't raise capital. You can get a loan, but you don't have anything to sell because you can't sell a part of yourself. So if you want to try to raise any outside money from friends, relatives, or anything else, you'd have to be a corporation or a partnership or an LLC. And then the third one is a taxation issue. And so I think Cynthia has gotten pretty sophisticated. I think 85% of small businesses would incorporate as S corps. Like you said, it's too complex and too long. What you find here is that you'll almost always do whatever by random coincidence the attorney or the accountant you were dealing with prefers. And so I would encourage you, as Cynthia's done, to at least read one book on all of these and see if you can't ask some really intelligent questions about the person you're talking to, rather than just saying, okay, fine, yeah, I'll do this. Yeah, you set up my chart of accounts. Okay, you do this, you do that. Learn enough to know why you might want one form over the other, and then have that conversation with your professional who's going to actually set this up. So I like corporations just because I'm old school and I've always had them, and I like S corporations, and there are lots of reasons why, but not tonight. Mm-hmm. Okay, so Cynthia, I'm going to run through these pretty quickly, but there are at least several comments that say you don't have to have a pro account to do FBA, and then a second confirmation. Also, at the moment, Amazon is letting us list our own product without having to have a pro account. So is there any advantage to having one anyway?
Yes, and that's a great question. Yes, you can do pro without having a pro seller account. And again, you can do FBA. If you're only selling a few products a month, less than 40, then you may say, well, shoot, why should I bother, right? Because really you're just an individual seller then. You're considered a casual seller by Amazon. If, however, you plan to sell more than 40 products a month, then you really should be going pro, because here's the deal. When you're an individual seller, you're paying $1 for every item that you sell. Okay, that's part of the fees that you pay to Amazon. When you're a pro seller, you pay a $40 flat fee, and you can sell as many products as you like. So if you're like me and you're selling hundreds of products a month, you definitely want to be a pro seller, because if I had to pay $1 for each one, that would really cut into my margin. And so the other reason why you would want to go pro eventually, you may not wish to start that way, but you're going to want to go pro, is because all of the listing programs that I know of require that they don't require that you be pro. Amazon requires that you be pro. You have to be a pro seller in order to connect with third-party software options. And so if you're going to use ScanPower or Listy or A Seller Tool or any of those guys for their listing program, you have to have a pro seller account. And that's Amazon. That's not ScanPower. It's not their rule. So again, it depends on what level and scale you want your business to be. For me, I want it to be a real business, and I want it to be bigger, and I want it to be a decent source of, even though it's part-time, a decent source of part-time income, right? But I have friends who are just doing it very casually, and they sell maybe 10 or 15 things a month, and they're happy with that. So it really is, that's a great question, because it really gets down to how serious you want to be about it and how much you want to sell on Amazon.
Here's a softball question for you. Do you do consulting work? How can you help someone to set up with FBA?
I do offer consulting. I charge $150 an hour, and I do it on a per hour basis. And usually I'll use Skype or Join Me or something. And I have gotten people set up. I've really consulted on all aspects of the business, from inventory to literally just helping them get set up. Like I've gone in and hooked up their printer for them. So I mean, it just really depends on what you need. And people who have bought my book get $50 off the first, my ebook, I should be clear. They get $50 off the first hour. And so yeah,
What's the best way to reach you?
Usually email is the best way. I do have my phone number on my my blog, but email is more consistent.
And what's the email?
Cynthia at fbastepbystep.com.
Okay, I think I spelled that correctly. I don't know if it's be clickable or not, but you'll get to see it anyway. Okay, let's try to do a couple of more questions. And do you have an accountant that works nationally with FBA people that you could refer that in a, or is there a special skill set or just kind of any old accountant?
Well, I will say, my accountant actually is better suited for consulting practices, which is what I was for many years. And so for an inventory-based business like we have, I'm working with her and, we have a great relationship. But I would really encourage people to find someone, possibly someone close that they can go in and sit down and talk with who is more familiar with this kind of business. It is a different kind of accounting. And so...
yeah.
I'm happy to put her name out there, but I just think that really it's more important to find someone that you can work with locally.
Okay, and one of the most popular questions we've had tonight and before the session started is this webinar being recorded? The answer is, if technology doesn't fail us, yes. And I think Cynthia, your intent is to get the recording both to those who were able to attend and those who were not able to attend, and we should be able to do that in the next day or two. Sometimes it takes a little while to render, and then we might want to edit it a little bit. But it should be out to them within a couple of days, don't you think?
Yes, and then we'll also include the PowerPoint with that too.
Yeah, okay. Great. Well, we've got some more, but I suspect we probably better let people get to the wine hour, speaking mainly for myself. So any final thoughts, Cynthia?
Well, I just hope that this has been helpful to everyone. And, I'm certainly, if you, still have questions, feel free to email them to me or post them on the blog. And I may take, some of those questions and put them into a future blog post to help people out. So, let me know if there's anything that hasn't been touched on or if there's anything you'd like to talk more about, because I know, we're only able to cover a certain amount of information in an hour. So.
Well, great. Well, thank you for inviting me. Maybe we had such a great turnout, huge registration, great turnout. So maybe we should think about doing a series of webinars over the next year or so and try to continue to touch on business principles that might be helpful. But anyway, I very much appreciate you inviting me, and I wish everyone out there great entrepreneurial success.
Yes. Thank you, David. It's been great.
Good. Thanks. Good night, everyone.
I really appreciate it.
Okay.
Bye.
Bye.